Welcome back, guys. Once more time, I'm here, and just let me know that voice is okay. Write it down or give me a signal that you can hear me. After that, I will go into the deep price action. It's all about rules, rules, and rules. Everywhere is rules. Let me know that you can hear me. Can you hear me, guys? Please let me know. It's very important. Hello, everyone. Hey, George. How are you, brother? Just let me know that you can hear me. The voice is okay. Can hear you. Okay, thank you, George. Thanks for confirming that. You can hear me. I can see very small people. That's good. It's always good to see some of you who actually very much curious to learn the price action. The dollar index, I thought it will come here, then I will discuss about the price action. If it would love to go higher and take the buy side liquidity, or if it would love to go lower and take the sell side liquidity over there, we will have two possibilities over there. You mark the the premium and discount, it will be deep discount, the premium. So that is a good place to sell, but I need to see first that higher time frame bias will tell me where we should go, and lower time frame, the daily daily chart will tell me how it will go. Okay, so it is what it is. I know it's a little confusing, but when I will be there, everything will be easier for you to understand. So it has taken the buy side liquidity. This is the extreme buy side liquidity. The I know, the what is the headings, I told you that when price will take some kind of obvious liquidity, then the immediate setup you have to sacrifice. You can't take the immediate setup, you have to sacrifice it, because 95% of the time, or 90% of the time, price actually do the consolidation for making another liquidity. Okay, because when price take the extreme liquidity, there is no other liquidity, so it will do some kind of consolidation or some kind of liquidity making things. So that's the theme of today's life. I'll go to Nasdaq. Here is Nasdaq, and I have marked the sell side liquidity over here. That was the extreme sell side liquidity from that low and that low. I'm unable to go lower time frame because my data is finished or something, and I don't have the money to my card. The credit card, because I use the Portuguese card. Okay, so I need some kind of confirmation message from Portuguese number, and as I'm in Bangladesh, so I failed to I mean what to say, that reset my plan, so I failed it. That's why I couldn't able to buy new subscription for the trading view, but I just bought the what to say, the data, okay, live data. So I will get the live data, but I am unable to buy the trading view plan, and Bangladeshi credit card actually doesn't support, so I am now helpless. I don't know how I will recharge this, but I already contacted with my friend. One of my friend, he told me that he will do that for me. Let's see. I have money, but I'm unable to buy a new plan. So this low actually, when if you go for the 1 minute chart, you will get a swing low over here, and that swing low, they're very clean. Above this low, this all are the low. The clean, what to say, the very clean sell side liquidity over here. I went for the extreme one. This is the extreme one because this is two fair value gap on above another. So price should come to this fair value gap, and if it is overzealous, then it will come to the consequent encroachment of this fair value gap. So this below this sell side liquidity, extreme sell side liquidity, I have this fair value gap. That's why I have marked this one instead of marking that one. Okay, this is the reason, two fair value gap. Okay, so what price is done? Okay, so price came here to this sell side liquidity. It has taken the sell side liquidity. Before taking this sell side liquidity, if you see the price action over here, it has taken this sell side liquidity as well from 15-minute chart. This is the buy side liquidity. If I go to 1-minute chart, you will see the buy side liquidity over there. Okay, just like so. Look at this high and that high. They are relatively equal highs, and this run has made this buy side liquidity more stronger. Before the AM session, we had a news at 10. So if I remember, yeah, this is the 10. We have the PMI or something. So that was the run for the PMI. We didn't have anything to do over here. We have to wait for the price action, how it react. So I was just watching the price over here, how it has booked the sell side liquidity. Before taking the sell side liquidity, it went above and clean all of this buy side liquidity. But I do nothing over here. Okay, there I could do nothing here. Now this is the first time. I mean, this is the place where we are actually building our trading or our bias or everything, because this is the first of the year. This is the second day of a new year. So this is also risky. Now, what I told you, when price will take the extreme sell side liquidity, please sacrifice the second trade. Okay, what did I mean by that? Look over here. When it has taken the sell side liquidity, it went little bit lower. Then that is a very nice market structure shift. If you mark that high as your swing high for shifting market structure, this is a clean market structure shift. Maybe there is there any fair value gap? No, there is no fair value gap, but just think there is a very nice fair value gap. Okay, just think for the example, because I don't know where the perfect I have is set up over here. I don't remember where was the extreme sell side liquidity or buy side liquidity over there. So just assume that there is a very nice fair value gap. Price came to that fair value gap, started to go higher. I would love to sacrifice this trade. Why? Because price has taken the extreme sell side liquidity. When price has taken this sell side liquidity, I have nothing here. No sell side liquidity over here. Yeah, I have this daily fair value gap, but that is not liquidity, that is imbalance. So I don't have any liquidity when price is taken. I mean, taken the sell side liquidity. So what I have to do, I have to wait for further price action, that market will make another liquidity, then I will jump for the trade. Now when price came here, it went little bit higher. If you think price is bearish, look over here, it has taken the buy side liquidity, market structure shift. This is your fair value gap. Price come over here, you take a sell over there, you will get stopped out. Okay, now after that, if you think like that way, price went lower, it has taken the sell side liquidity, this is your market structure shift, this is your fair value gap, so you take your entry over there, is going higher. Okay, that's good, this time it is working. But look how many times you will be stopped out. If there was a fair value gap, you would be stopped out, you would be stopped out over here, then you will be successful over here. So if you just sacrifice one trade, the first trade immediate after taking the sell side liquidity, look over here the price action, this is your first setup. Price has taken the buy side liquidity, market structure shift, fair value gap, price came here, you have sacrificed that sell, you are not willing to take that sell. Why? Because price has taken the very clean sell side liquidity, so you are going to sacrifice that liquidity. Instead of that, you are waiting to make some kind of more obvious liquidity. Now after sacrificing this this sell setup, you saw this run, it went higher, it gave you very nice market structure shift after taking sell side liquidity, maybe a fair value gap over here or this fair value gap. If you would love to take that entry, I'm telling you, please don't take that entry as well. Please don't take this one. No, nobody told me about this. I didn't learn this from ICT. ICT never talked about this. Okay, but I saw after taking the extreme sell side or buy side liquidity, price actually do consolidation, or it actually do it has nothing to do except making the liquidity. And how does price make the liquidity? By consolidating. Let me go to the 15-minute chart. Look over here the price action. See, this is not clean price action. Yeah, from 1-minute chart it is very clean, but from 15-minute chart, look, there is nothing. no buy side liquidity, no sell side liquidity. So I have to wait for making liquidity first. It came lower. Did it make any kind of liquidity? No. But it has traded a fair value gap from 15 minute chart. That's good. It is going higher. That is also good. If it come here, make very clean buy side liquidity, then there is a fair value gap. Price will come to that fair value gap. What do I mean by that? Let me actually mark. It come here, okay? It has make this high and that high very relatively equal high, or maybe little bit lower than that high. Then there is a fair value gap. Price come over here. Then I will go to the 1 minute chart, and from 1 minute chart I will wait for a setup over here for buy, because price has made a buy side liquidity over there. Or let me go one more time to the 15 minute chart. Just think like that way. Instead of going higher, price actually came lower one more time. It has made very clean sell side liquidity with that low. It has made very clean sell side liquidity, or maybe price will come here little bit above that swing low, but it will make relatively equal lows. That will be my very clean sell side liquidity. Then it will come here. Maybe there will be a 50-minute fair value gap, and then I will go to 1 minute chart one more time, and I will try to find a setup over here for sell setup. I mean, price will take the buy side liquidity, or I will use the last 50-minute fair value gap, consequent encroachment rejection, then touch to the lower part of the fair value gap. Then that sell side liquidity will be my target. Here I will do nothing because price has taken the extreme sell side liquidity. Okay, I know it is little bit confusing. I really don't know you are getting my point or not. My overall, I would love to say you, when you will see that price has taken the extreme sell side liquidity or extreme buy side liquidity. There is no sell side liquidity below that sell side liquidity. I mean, very near to that sell side liquidity. There is no sell side liquidity over here. There are no relatively equal lows over there, or maybe single low. Nothing over here. That means it has taken the last sell side liquidity. After taking that, if you see there is very clean buy side liquidity, don't take entry over there, because there is no way, or there is nothing that is telling you market is going to take that liquidity. Now you can see this is the shallow run. Okay, this is the shallow run. I'm telling you this is not the perfect place to explain this thing, as I don't have a perfect example over here. That's why I'm telling you. Okay, just think there is no buy side liquidity, there is no shallow run, nothing over here. Okay, this is just a swing high which has taken the buy side liquidity, not a swing. I mean, the shallow run. Instead of the shallow run, it is kind of very clean run that has actually taken the buy side liquidity. Okay, then price has came and take the extreme sell side liquidity. Now price is going higher. Don't take that entry. Don't take that sell entry. Don't take that buy entry. Why? Because you don't have any liquidity. Let price make some liquidity first. When it will make some kind of liquidity, not from 1 minute chart, go to 15-minute chart, at least 15-minute chart. If you would love to go 1 hour chart or daily chart, 4 hour chart, that's good, but the lowest time frame is 15-minute chart. So you have to go to 15-minute chart, and you have to wait for price making another liquidity. Either it will make relatively equal highs, or it will make relatively equal lows. Then when it will retrace, you will go to 1 minute chart, and at the retrace point, where it can retrace, if there is a very clean 15-minute fair value gap, that is the place where price could retrace. Okay, what do I mean by that? I'm just trying to give you the same thing again. Okay, it came here, it has made relatively equal lows. Then there is a 15-minute fair value gap, so price came to that 15-minute fair value gap. Then you will go to 1 minute chart, and from that 1 minute chart you will wait for the setup, and your target will be that sell side liquidity. Okay, that is my point. I mean, if you do that, you will you can easily avoid some losing entry. Okay, look over here. I know it is I mean hindsight, and you will think, brother, this is after price action, so you actually showing us something that has already happened, that's why you are telling us. No, brother, I'm just telling you this, and you just backtest this thing, you will understand. Okay, this sell side liquidity is from 15-minute chart. I got the lowest sell side liquidity over here. After taking the sell side liquidity, price went higher as my bias is bearish. Okay, my bias is bearish. All of you know that my target is price will come over here. Okay, so when price came here, it has give me a fake run over here. It has taken very clean buy side liquidity over there, came lower, if in market structure, this fair value gap, price came to that fair value gap. Am I willing to take a sell over here? No, I'm not. I'm not going to take a sell over there. Though my narrative, my everything is telling me price will go lower, I'm not interested to take sell over there because prices just take a obvious liquidity. So it will do consolidation. It will it will chop up sometimes. It will make some kind of liquidity first. After that, I will get a run. I have to wait until that time. When price was over here, just think it didn't. I mean, we have no news at 10. Okay, we don't have any news, or we have a news, no problem. It has taken the buy side liquidity, price come over here, failed to take that sell side liquidity. Okay, it failed to take that sell side liquidity. Instead of that, it came here. I mean, just think, uh, this price action didn't happen. Price price didn't came below that level. I mean, the high of that, I mean, that box, price didn't came below that level. Instead of that, price went higher. So if I would see that, then I would go, I mean, I would look for a setup over there, and this sell side liquidity would be my target because this sell side liquidity is still open. Price should take that sell side liquidity. I have tweeted this beforehand. I mean, in the morning, I have tweeted. If you are with me in my Twitter, you already know that I told you. Uh, I mean, I marked this sell side liquidity. I told you that market is going to take that sell side liquidity. Look, price has taken the sell side liquidity, it started to consolidate, then went higher little bit. Maybe tracing, maybe it will take the buy side liquidity because this is the shallow run. I believe this is a place where it should go. Okay, because the shallow run, I told you, if you see the shallow run, then just mark the high because that high is more obvious. But I am not interested to take a buy or anything over here because my expectation is market will go lower. Now it is going higher, that's good. Maybe it will come here or something, but if I would see a setup over here, that would be my best setup. Okay, I don't have any setup over here, nothing. I have nothing over here. Maybe you have a setup over here, maybe, but I don't have anything over here. So I am not willing to take any kind of entry at that price action. I have to wait for further price action. I will see when price will make some kind of obvious liquidity. Then maybe after that I will go for the setup. If I take this setup, that is gambling for me because I'm very hurried to take a entry. And if you are very hurried to take a entry, trust me, brother, it will hurt you. Today maybe you will be lucky, so you will take a winning trade, but tomorrow you will take a losing entry. And when you will take a losing entry, you will blow your mind, and also you will blow your account as well. I don't know you guys got the point or not. I mean, two of my brother, they actually told me to explain this thing, and I thought I will make a video, but making a video is more, painful for me. So I thought, okay, let's go to live and talk about the tweet I have tweeted. I mean, the rules tweet I tweeted in the morning, maybe. Yeah. So I just come to live and I talked about this. And now just let me know, just comment below that you got the point or not. If you are not clear yet, then I will talk. I mean, I will talk more about this thing. Okay, because if I just repeat the same thing again and again, you will be bored. So I need to know first that you got my point or not. Okay. Hey Ravi, how are you, brother? Please let me know that you get my point or not. I need to know that. Can you hear me? Boom boom. Anybody, please respond me. I mean, if you don't get my point, then I will actually, uh, I'll repeat the things. If you get the point, then I will move move on, and I will talk about the price action over here. Clear, brother? Okay, Ravi, thanks. Thanks, brother. Thank you, thank you. Anybody else who has confusion about this, or it is it is clear for all of you? George, are you there? Ravi, how is your trading, brother? I mean, uh, how do you read the price? Is it same like you did before? The way you read the price before, or it has improved a little bit? Okay, just let me know that, brother. See the price action when, what is this? This is the inversion fair value gap. Okay, let me actually talk about the inversion fair value gap as well. I love to talk about this. Price came lower, went higher. When it went higher, this is the fair value gap. So price should come to this fair value gap, and it should make this fair value gap as a support. Then it should go higher because I have very clean buy side liquidity over there. But what price has done? It went lower. Now, when it go through this fair value gap, this is my inversion fair value gap. Why this is my inversion fair value gap? Because when price went higher, it failed to take the swing high. So this is the most obvious swing high for me until the price action over here. This is the swing high. This high has failed to take that swing high. When it has failed to take that swing high, this fair value gap is more obvious for me for being a inversion fair value gap. Okay, so price come back again to the constant encroachment, went lower, come back again to the constant encroachment, failed to close above the constant encroachment. Then it has traded the lower part of the last 15-minute fair value gap or the inversion fair value gap. It expand lower from 1 hour chart. So far I remember it is from 1 hour chart. Yeah, from 1 hour chart. This low and that low. Okay, I'm just marking it until here and changing the color. Then I'm going to 1 minute chart. This is the line I have just I mean draw. You see this all the shallow run. I mean price went below that low yesterday, and this is my shallow run. If I see this type of shallow run, and if my bias is bearish, look, when price came here, it went higher. This is the more obvious level. This is more obvious level. Price has taken this sell side liquidity. That is actually more obvious sell side liquidity. Before taking that sell side liquidity, it has taken that sell side liquidity. After taking that sell side liquidity, it went higher. When it came here, this is the place where you could take a entry. Now this is the place before the session, I mean before the AM session. Sometimes you have to take your entry before the AM session. Now this is also a rules. I really don't want, I don't know I should talk about this or not, but okay, let's talk about this. Before 9 you are allowed to take your entry, but when you should do that? If you see I mean there is a news, big news like PMI, CPI, FOMC, or that type of big news at 8:30 or 10 a.m. in the morning session. If there is a news, you are allowed to take your entry from, I mean before 8. If there is a news at 8:30, you are allowed to take your entry before 8. That means you can take your entry at 7, and you can keep that entry until 8. After 8 you have to kill that trade, because after 8 that is too risky. If there is a news at 8:30, if there is a news at 10 a.m. in the morning session, then you are allowed to take your entry between 7 to 9 a.m. in the morning. But after 9 you can't hold your trade, you can't. Okay, if there is a news at 10, you can't hold your trade after 9. If there is a news at 8:30, you can't hold your trade after 8, or I mean after 7:59. You are not allowed to hold your entry. Okay, But before, I mean, today we had the news at 10, the 10 candle. So you are allowed to take your entry until 9 or hold your entry until 9. This is the 9 candle. So you see this setup was very clean. After taking this sell side liquidity, it went higher. It came to this last fair value gap. In my opinion, this is the last fair value gap from 1 minute chart. In the meantime, it has made very clean buy side liquidity. It failed to take that buy side liquidity. When it failed to take buy side liquidity, it went lower, gave me very nice market structure shape. This is the fair value gap. If you would love to take your entry over there to that fair value gap, and if you just mark any kind of last fair value gap or some other fair value gap, like maybe you can hold your trade until here. You can do that as well if you want, but you have to take a partial below those lows, or you can kill your trade over there. That is not a small trade. I believe that is kind of 20 handle trade. That is also perfect. So you can take your entry before from 7 a.m. in the morning to 9 a.m. in the morning. In between in that time, you are allowed to take any type of entry. If you see a very clean setup with a very clean sell side liquidity, you are allowed. Brother, my trading has improved drastically. Learning from you. Thank you, brother. I really would love to know that from you guys. And look at the price, brother. This buy side liquidity, okay, that high and that high. That is the buy side liquidity from 1 minute chart. How do you think this is gonna be working? This setup is going to work. It is not going to take that buy side liquidity. How do you know that? If you ask me that, okay, if you ask me, how do you know that that very clean buy side liquidity is not going to be taken when after taking the sell side liquidity here, it went, it has given a very nice setup over there. It is going higher, higher, higher. It just stopped over there. Okay, it has stopped over there. Why you are not thinking that it is going to take that buy side liquidity? You can ask me that. Now, this is the logic, and if you can remember this logic, that's good. If you think you can't remember this logic, then please write it down. Okay, I have a news at 10. Try to understand, brother. Price has made very clean buy side liquidity over there. I have very clean sell side liquidity over here. Okay, this buy side liquidity price came here. What time is it? It's 8:39. It come here until here. When it come here, where did it came? From the 1 minute chart, I can see it came to the last fair value gap or the last order block, whatever you say. Now I am not sure it is going to take that buy side liquidity or it is going lower again. Okay, but I will expect it will go lower. Now where it will go to take that sell side? No, it is not going to take that sell side liquidity. What it will make? It will do, it will keep the level open over here. The buy side liquidity, it will keep it open. Why it will keep it open? Because at the AM session, I mean at the news time, or if there is no news, just forget it. Forget about the news. Just think about the 9:30 opening. So this is the 9:30 opening. At 9:30, as we have the news here, so 9:30 opening is very, very sloppy. Like here, you can see very sloppy price action over here. But if there was no news, you would see 9:30 opening will take the buy side liquidity, then it will expand lower and take the sell side liquidity. That is why always remember, okay, at 9:30, at 9:30, the run, if you have no news at 10, the 9:30 volatility will take some kind of liquidity. If my bias is bearish, it would love to go lower. It will take the buy side liquidity first. Now, price always make the buy side liquidity for 9:30 opening. It will always make the buy side liquidity for 9:30 opening. Now, always means 100% of the time? No. Nothing is certain for 100% of the time. Nothing works in this market 100% of the time. Nothing. There is nothing. If anybody tell you it will work 100% of the time, they're lying to you. Nothing works 100% of the time. Most of the time you will see 9:30 opening, the volatility. First run is the fake run, and that fake run actually takes some kind of, if you are thinking market will go low, then the fake run will take the buy side liquidity. Okay, I'm telling you again, if there is no news at 10, if there is a news at 10, 9:30 opening will be very, you know, very sloppy, or nothing will be important over there. 9:30 will be just bullshit, okay? Something like this. I really don't know what is the English word for that. But 9:30 opening is not valuable or important for us. If there is a news at 10, I mean the high impact news at 10. But if there is no high impact news at 10 or 9:45 or something like this, okay, after 9:30 opening, if there is no news, then you will see the first run will take the buy side liquidity. Now there is 90% of the time you will see price will make the buy side liquidity over there. I mean, I'm just giving you one example. You will think the opposite way. Okay, my bias is bearish because I have this sell side liquidity. I told you beforehand that price is going to take that sell side liquidity, so I'm giving you the example for taking the buy side liquidity. At 9:30 opening, it will take that buy side liquidity. Now price will make that buy side liquidity first. How did it? What is buy side liquidity? Buy side liquidity in details, that is actually retail thinking. Retails are retail trader, they are thinking this is a strong resistance. Okay, this level is very strong, so they took the sell over there. This is the buy side liquidity. The sell side liquidity, what does it mean? That means retail trader thinking it's a very strong support, so they actually buy their trade over there and they put their stop loss below that level. So this is why we called it sell side liquidity. So actually price will do this thing. They will, I mean, price will deceive the retail trader. Price will make them thinking this is very strong resistance. Why price will do that? Because of 9:30 volatility. At 9:30 volatility, it will take the buy side liquidity. That means whoever takes the sell over there, they will be stopped out. After that, it will go toward that sell side liquidity. Okay. Now, if you're thinking market will go high and it will take that buy side liquidity, that your bias is bullish, you are thinking price will go higher, then at 9:30 it will take the sell side liquidity first, then it will expand higher and take the buy side liquidity. Okay, now if it would love to take the sell side liquidity first, then it will make the sell side liquidity. If my bias was bullish, then this run will come here, maybe it will come here very near to the sell side liquidity, but it will fail to take that sell side liquidity. Always remember, price actually give very big run by using the volatility time. There is some macro time, there is some opening time like 8:30 opening, 9:30 opening, and there is the news. All of these plays are actually volatility time, and we get big run at that time. That is why market make the liquidity before that specific time, so that the market maker can take the liquidity by using the volatility of 9:30 opening or the news time. Okay, this is the reason, this is the way you will think. Now when I saw price came here, I wasn't here, I mean, I didn't want, I wasn't able to take my entry because I was busy with my personal work, so I wasn't here. But if I would say, I would see price came here, if there, as there is a news at 10 and then gave me this base clean setup, I will be happy to take my sell over there, and I would target that fair value gap. Okay, I wouldn't target this low, to be honest, brother. I wouldn't target there, but I would target this fair value gap. Maybe to the 50% of this fair value gap, I would target over there. Okay, and my entry would be here. Stop loss would be above that high. I mean, if I am stopped out, okay, no problem. That is very small run. I think 700. Okay, it's small 700, and I would, I mean, 20 handle for something like 20 handle, I would take that entry because I believe that this is before 9:30. Why I am going to take that entry? Because I have very, I mean, I have news at 10, so I will be unable to take my entry at 10. I will do nothing over here. I know that beforehand. All of you know that we are not allowed to take our entry at that specific time. So we should do something before 8:30 opening or 9:30 opening. We should do something at that level. If you see very clean thing, when price is going higher, it failed to take that buy side liquidity. What does it mean? That means it is making that buy side liquidity for the 10 a.m. news. So this setup is valid. You should be confident about that setup. Now, will you target this sell side liquidity? No, you shouldn't target that sell side liquidity. Why? Because if it take the sell side liquidity already, after clearing this thing, this is the manipulation. After this manipulation, where price will move? Where should it? Where it will go? If you have already taken the liquidity before the news, after the manipulation, where it will go? Just ask yourself. This is a very simple question. Okay, just don't think that just think that there is no news. Okay, so 9:30 it has taken the buy side liquidity, that is fake run. Okay, fake move. It has this that is called also the manipulation. The manipulation has done. Now beforehand it has already taken the sell side liquidity. There is no sell side liquidity. Now where the price will go? You don't have any buy side liquidity. You don't have any sell side liquidity. Where price will go? There is no place where price could lead or price could go toward. Okay, that is the reason you are not going to. I told you, and ICT always tell that first price, I mean time. You have to think about the time first. After that price, okay, try to understand, brother. Uh, I'm going to read your comment, George. Just let me finish this first, okay? Just one more minute, okay? Time is first. So before 9:30. Why time is important? Because 9:30 is the time where you will see volatility. 99% of the time you will get the volatility. 99% of the time you will get the volatility. A small volatility that could be happen, but you will get the volatility. Look at this 1 minute candle. Just this 1 minute candle, 33 handle. What do you think about this? This is the volatility. 33 handle is not small, it's huge. Okay, so sometimes you will get 50, 60, 70 handle run at by 1 minute when 9:30 open will happen. Okay, so that is the volatility time. Now 9:30 is a important time. Before 9:30 price will try to make the liquidity. You have a news at 8:30. Okay, just think you have a news at 8:30. Just think this is 8:30. So you have a very big news at 8:30. Before 8:30 market will make the liquidity. It will make the liquidity. That's why if you take that buy, okay, just think it has taken the sell side liquidity, market structure shift, there is a fair value gap. You have take your entry to that fair value gap, and you have targeted that very clean buy side liquidity. That is very clean buy side liquidity. Maybe someone told you, if you see that type of buy side liquidity, you are going to target that buy side liquidity. Are you going to hold your trade until there? No, I wouldn't do that. Why? Because if it has taken that buy side liquidity before I mean a specific time, 9:30 time opening or maybe 8:30 opening. If there is a news at 8:30, if there is no news at 8:30, then 9:30 is important for me. So what price will do at 9:30 opening? What it will use that volatility for the manipulation. If it has taken the buy side liquidity already, 100% of the time you will see this. No, sometimes you will see it has taken the buy side liquidity before the 9:30. Nothing is certain for 100%, but 99% of the time you will see the buy side liquidity. It will make that buy side liquidity more stronger. It will make that sell side liquidity more stronger. Look over here. What time is it? It is at 9:33. Okay, it came here, but it failed to take that sell side liquidity. Why it failed to take that sell side liquidity? Why? It could just reach a little bit. How many handles over there? Just 8 handle. Just 8 handle. It left 8 handle. It could take that sell side liquidity, but it didn't do that. Instead of that, it has made that sell side liquidity more stronger. The retail trader, they're thinking this is a very strong zone. Okay, they don't see the level, they actually see the zone. Always try to understand, always remember this. They actually see the zone. So when they see it came here, they took buy because they believe this is a very strong zone. Okay, and what do we think? We think at 9:30 or after very immediate 9:30 opening, price didn't take that sell sell. Why? Because it we have a news at 10. So at 10 we will see this run. It is going to take that sell side liquidity by using that 10 at the 10 news. That is why it is not going to take that sell side liquidity. I believe that very soon you will understand. Look over here. It is very nice consolidation. Now you can say, brother, before this consolidation, we got this run. So if we would take that entry, we would be already profitable. Yeah, I believe that you would be profitable. If you took that entry, where will be your target? Where you should target over here? Do you have any baked in by liquidity? Maybe some of you are actually very fan of swing high. That is your buy side liquidity. So you will hold your trade until that buy side liquidity, the consolidation over here. You are just waiting. You are waiting. You will be, this is the pressure on your heart. I did this thing when I take this type of entry and I just wait to see that it is going to take that buy side liquidity, then it started to go lower. I was thinking, okay, let price come back again to that level one more time. I'm going to kill my trade. When price will come here, I didn't kill my trade. Instead of that, I'm waiting. Okay, maybe this time it's going to take that buy side liquidity. Then it come back again lower. This is the thing, all of you know better than me. How does it feel? Okay, why this buy side liquidity is still valid if it has been already taken at 10? Brother, it has okay, thanks for the question, brother. Thank you very much. Look, it has taken the sell side liquidity, what I showed it to you from 15 minutes there. Below this sell side liquidity, there is a 15-minute fair value gap. Okay, so I will mark the 15-minute fair value gap from here. Let me change the color. So this 50-minute fair value gap. There is a water block level. I am not going to mark the mean threshold, and below this water block there is another 50-minute fair value gap. Now come over here. Maybe it has traded this 50-minute, the last 50-minute fair value gap. I think it came here. Okay, just let me show where did it came. Can I go to 1 hour chart? I get some from 1 hour. I'm using 1 hour chart because you see it is very difficult for me to find out where it has traded. Okay, so it has traded this fair value gap. I'm just going to mark this fair value gap from hourly chart. Okay, that is the hourly fair value gap. So it has taken, it has traded this hourly fair value gap. Just think it has traded that hourly fair value gap, or maybe a 15-minute fair value gap, whatever. It has traded over there, but it has taken the sell side liquidity. Now it doesn't have any liquidity below this sell side. When 10 a.m. news has taken the liquidity over there, what do you see? How it has taken the liquidity over here? Is it clear? Can you say this is liquidity taken? Very clean liquidity taken? Do you see like that way? I see this is very shallow run, a very little run. Just peak over there and then fall. Okay. It has taken the liquidity. Obviously, it has taken the liquidity by set liquidity, but at the meantime, it has made relatively equal highs. That high, that high, and those highs, all of these things are actually the new buy side liquidity. Look over here, from here to here. This is the zone, and I am going to mark it until. So this is the zone. This is the sell side. The resistance zone. People are actually selling over there. They are selling over there. Why this is very important for me? Because of this shallow run. Price has taken the sell side, the buy side liquidity. At the meantime, this is the shallow run. Now, this is kind of manipulation. This is kind of buy side liquidity taken. This is kind of that type of things. But if I see that type of shallow run, I believe that market will reverse over there and it will clean the buy side liquidity perfectly. Because of this shallow run, price go over there, it broke down. It it helps to believe the retail trader that this zone is unbreakable. I mean, this this zone it can't be broken. Let me actually take an entry over there, just just for your understanding, okay? And this side, I believe this is going to work. Very small, though this travel gap is very small, so I'm going to mark that travel gap. I'm just going to mark that travel gap. Now, I believe market is going to take that buy side liquidity. Why it is going over there? Because of this shallow run. When it will do that, I really don't know. But I believe market will come over here because of that shallow run. This is manipulation. What does it mean? Manipulation means it. What does manipulation mean? When price is going higher, all of the people they're thinking, okay, this is the time to take buy. When it will break that level, that buy side liquidity level, when it will break that level, people will think this is the time, perfect time, because resistance has broken. It will support now, it will act as a support now. This is the place they took buy and they got stopped out. This is the place, the perfect place. Now I really don't know how to explain this thing, but if you see this type of shallow run, I mean the run above the buy side liquidity, if you see that, trust me, brother, market obviously will go over there one more time, and it will take that buy side liquidity a very clean way, a very clean way. It will go above that level. You will see the candle close above that level. You will see everything over there, a lot of working over there, so many candle over there. After that, if it would love to go lower, it will expand lower. Right now, it is going lower. I believe. Am I going to stop out? This is the main threshold of the order block. Let me, and please don't take this entry, okay? I took this entry to show it to you. That work. Maybe I'm going to be stopped out. Maybe. I will see this min threshold level, because if this is broken, there is 99% of it. I'm stopped out. That's good. Don't work it well. Or whatever. I'm stopped out. I thought it will go higher, but it is what it is. It is going lower. My overall bias is bearish. I am not willing to take my buy over here anyway, because before making the buy side or sell side liquidity, no setup is valid. This is the shallow run. It should be taken. When it will do that, I have no idea. When it will do that, I have no idea, as my bias is bearish. I am expecting the lower run. Now, you can say, brother, you are stopped out. That's why you are telling this. Look at this buy side liquidity. They're very clean. This buy side liquidity very clean. You have very clean buy side liquidity over here. See this high and that high, they're relatively equal highs. All of these buy side liquidity are very clean. You have very clean buy side liquidity over here, and finally the time it the last time it has taken the buy side liquidity, this is the time where price has taken the buy side liquidity. After that, it has made so many buy side liquidity over there, so many buy side liquidity. It didn't take all of this buy side liquidity. I have just marked it because it should come to this travel gap first from the higher time frame. It should go over there. So maybe it is going to I mean keep that buy side liquidity like that way. It is going to keep that open like that way. Okay, so maybe it will take that buy side liquidity later. Right now it is hurry to take, I mean come over here. I believe that. And today is Wednesday, so extension day. It has to go and take the buy side liquidity, little a small buy side liquidity, then it should expand lower. Take the buy side liquidity, expand lower. It should do that type of thing. This is also the first week of the January, so very careful. I mean, you should be careful about the price action over here. I think that is enough. I mean, you guys got my point, and now I'm feeling bad because I took that buy. I was thinking to show you that he's going to take that buy side liquidity, but it failed. And instead of that, it went lower, and I believe it will use this fair value gap go lower. Let's. It will use that fair value gap. Do I have fair value gap over here? Yeah. So two fair value gap one above another. It shouldn't go above that breakaway gap constant encroachment. It shouldn't go above that. Instead of that, it should go lower where it should come at least to this. It should come over here at least, okay? And as it has failed to come to this hourly fair value gap, maybe it will come to this hourly fair value gap. It will go through this hourly fair value gap, whatever it will do. I'm not going to actually explain the entry or trade entry anything over here. The theme was what you should do after taking the extreme liquidity. After taking the extreme liquidity, you have to wait for making some kind of liquidity first. Now, did it make any kind of liquidity until now? I can see it has made, it is going to make this liquidity now. This low, this low, this low, and that low. All of them are making a sell side liquidity now. Okay. So I need some kind of liquidity. Now from where? From 15-minute chart, if you can mark the liquidity from 15-minute chart, that would be much more easier for you because that is more confident or very easy to I mean read the price from 15 minutes. Lower time frame is too much noisy. I use the lower time frame when I get something from higher time frame, then I go to lower time frame and I take my entry from lower time frame. So from I will wait until the higher time frame, I mean the 50-minute time frame will make some kind of liquidity first. Do I see any buy side liquidity over here? No, I don't see any buy side liquidity over there. This pure consolidation though. So it is coming here to this constant encroachment. That's good. Let's see if it can break this constant encroachment or not. I mean, breaking constant encroachment means body has to close above the constant encroachment. Wick can come here. That's good. But if it failed to break this consequent encroachment, that is our well-known setup. I mean, after taking the little bit buy side liquidity, market structure shift, then there is two fair value gap on above another. It should come to this fair value gap at least. If it is extreme, then it will come over here. Now it is actually consolidating. See, just don't do anything after taking the extreme liquidity. Okay, I'm forcing market because I am not interested to take any kind of sell or buy over here until it will make some kind of liquidity first. When it will make some kind of liquidity, I will jump for the trade. Otherwise, whatever I will do, that is gambling. I will think it will go lower. Look over here, I was thinking it will go higher. Came here, it went lower. It is coming here, maybe it will go lower, maybe it will go higher. I don't know. Until it will make some liquidity, I have nothing to do. So that was my tweet. I mean, after taking the sell side liquidity or buy side liquidity, extreme liquidity, you have to wait for price making another liquidity level. Until then, don't do anything. So that was my theme for today's live. I hope that's clear. I mean, I am able to make that clear. You can follow that. Trust me, brother. It will help you to avoid so many losing entry. It will help you. I think I understand, George. I hope you will understand this. Okay, guys. Now I'm going to close my session. I mean, if anybody has any more question, you can ask me. Otherwise, I'm gonna close the session for today. And don't judge me about that loss because I'm feeling guilty now because I took that loss. To be honest, but I'm feeling guilty. I thought it is coming over. I don't. I really don't know. It is going to take that buy liquidity or not right now because my overall bias is bearish. Should go low until here. I'm only looking for some kind of sell. That is the thing I'm just waiting for. And if I see some kind of very clean setup over here, maybe then I will be interested to take buy. Okay, this is not a perfect buy setup, and obviously this is not a buy setup, but what it is. Feeling guilty now. Love to see the price action over here, how it react over. Do you have any question, brother? Why don't you write down something? I mean, I saw, if I were we, I mean, if I was like you, I would ask at least thousand of the question. If there is anyone who is willing to answer my question, then I would ask at least 1000 question to him. Brother, why that is, why not that, or why you are doing this, why you are not doing that, to be honest, brother. Because yeah, brother, that is the thing. We are rule based. To be honest, brother, we are rule based. Wait until it will make some kind of liquidity from 15 minute chart, not from 1 minute chart, from 15 minute chart. Wait for them, wait for that level, and then that is very easier for you to take the entry. You have very clean buy side liquidity or sell side liquidity. Now, buy side liquidity, I am not willing to take that entry. I'm willing to take the sell because my belief is market is coming here from daily chart. So from daily fair value gap, see this fair value gap. There's two fair value gap. One fair value gap. This is the one fair value gap. This is the second fair value gap. After taking the sell side liquidity, this is market structure shift. This is the first fair value gap. This is the second fair value gap. So this is the breakaway gap. I mean the last fair value gap from the daily chart. And this, let me actually mark in all of this level first. That is the daily fair value gap. Okay. So this is the first fair value gap. What do you know about this thing? This is the fair value gap. From price should come to this fair value gap, then it should expand higher. Okay. Now I am not willing to see that. I would love to see price will come to this level. What is that level? From weekly chart, you can see it has taken the sell side liquidity, market structure shift. This is your first fair value gap. This is your second fair value gap or the entry gap. Okay, so that should be your breakaway gap, and that should be your. I mean, you should take your entry to that fair value gap from weekly chart. From daily chart, same thing. Taking sell side liquidity, market structure shift, breakaway gap, first fair value gap. Now, as I have higher time frame fair value gap over here, that's why I'm not interested to take to mark that daily fair value gap. Instead of that, I am interested to mark this lower fair value gap or the daily fair value gap, because I believe market is coming over here. So if it would love to coming here, it has to come to this fair value gap first. Okay, that is why I'm not interested to do anything about this fair value gap. This fair value gap is not important at all for me. This this daily fair value gap. I'm interested to work with this fair value gap. That's why I'm going to remove this fair value gap, and I will wait. My bias is will be bearish until it will come here. Now it will come directly over there. I don't think so. It will do this type of thing, and it will expand lower, retrace lower, retrace lower. That way it will come at least to this daily breakaway gap. Then if this breakaway gap fail to hold the price, my target will be this weekly first fair value gap. Okay, or the entry gap, and below this fair value gap there is the breakaway gap. So that's the thing, brother. And look at the price. I believe it is going lower because this is the fake move. I mean the fake run. I believe this is the fake run. Until now, the last fair value gap hold the price. Nobody closed above the constant encroachment. That is my belief. So price should expand lower, and it should take this sell side liquidity, then that sell side liquidity. After that, it will expand much more lower. Okay. Now, if you would love to mitigate your loss, love to. Now, this is forcing market. To be honest, brother, this is forcing market to give you a setup. You shouldn't do that. As I took a loss, I took how much? 265. Okay, I'm going to mitigate my loss. So it was 800. Oh, yes. So I'm willing to mitigate my loss. Let's see it can mitigate, it can help me to mitigate my loss or not. I will add one more contract if price react with my expectation, then I will add one more contract. I believe market can't go above the mean threshold here. Mean threshold of the order block, it can't go above that mean. Why I am interested for that? Because my past is telling me that market should go lower. It has taken a little bit liquidity over there. After that, it has given very nice market structure shape. This two fair value gap, the lowest fair value gap, the highest fair value, that should work as a breakaway gap. And after rejecting from that breakaway gap, price going lower, this order block level is important for me. So I try to take an entry to that order block level. If price can go below that low, if it can go below that low, then I'll be interested to add more. Otherwise, I will just wait, and if I'll be chopped out, and that's good. I believe it will work. Okay, I have the, I mean, what to say, the macro here. So let's see this macro works or not. It can come back again to the min. It can come to the min threshold level. It can come before expanding lower. It can come to this min threshold. Thank you, brother. Okay, which order block do we know to use and which not to use? Order block. Order block is something you are going to get very soon because ICT is going to publish his book. So you are going to get it very soon. Don't worry, brother. You don't need me, I think, for learning that. Please don't ask me anything about the order block. Please. That is my request. Please. Hey, brother, you have a wonderful way of explaining Lavi. Thank you, Rakesh. Thank you, brother. Like Breaker explained, Lord, but for master rate probably controls for brother. Please don't ask me anything about the order block. Please, that's my request, brother. I don't want to talk about order block. Now, if anybody tell you about the order block, I'm happy to see that. But I heard, ICT told so many times that people are actually using his water block theory in a wrong way. So he also didn't explain what is water block. Yeah, you will get uh, what is water block from his core content, but that is in general. Okay, that is the explaining of a concept. That is not, you are not going to learn what is water block from the core content. To be honest, brother, you are not going to get anything from the core content if you take the concept from core content and then you do backtest. You see so many price action regarding that thing, then you will learn little bit about the concept. Okay, whatever ICT cleared later, that is more clear. So order block I got by my observation of the price. Okay, that is the thing, I got it by my observation. Now it could be wrong, it could be right, I don't know. Okay, I really don't know, am I right or am I wrong? So I don't want to explain something I'm not 100% sure. Please don't don't get me wrong. I I respect him, and as he told that he will explain order block to his book so that nobody can uh, change the theme. Not every last down. The upload candle before the down move is order block. Somebody will tell you this is your order block, that is your order block. No, I don't believe this is your order block or that is your order block. There should be something that should be met, then it will be your order block, otherwise it is not your order block. But I really don't want to talk about this. Okay, Ravi, I'm very sorry, brother. I'll just close my trade with after this entry. Okay, I mean, let's see it works or not. So what was the theme? The theme was it has taken some kind of buy side liquidity from here. You can see this buy side liquidity has taken by that run. Then it was a little bit consolidating, and then it came here. After that, I got market structure shift over there. There's two fair value gap. One is here, one is there, one above another. So two fair value gap. If it can go below that low, and if it can come to this fair value gap one more time, I will add more. Otherwise, my loss is 265. So I will I will just wait, and I will keep my stop loss over here. Very tight stop loss. I don't want to take one more loss, mitigate my loss. Okay. Hmm. There's very nice fair value gap over here. It's risky because I'm very near to the launch hour. Okay, don't add. Let's wait for trade here. I don't think I have to add more to mitigate my loss. My loss almost. So I can wait for mitigate my loss over there. But to be honest, brother, this is gambling and perfectly gambling. If I were in my live account, I wouldn't take that entry, not even that entry. I wouldn't do anything over here. As I told you, you have to wait until price has made some kind of liquidity first from the high time frame. Okay. I thought I will add over here. Let's add one more for that because it has traded this parabolic gap and I was above the mean threshold. As I have added one more, so I do not want to I mean use my stop loss very tight. I don't want to use that one as it has taken this low, can easily reverse, can do that, but I want to see it will go lower and it will take this liquidity. I mean this lows, it will take that one. I believe that. Okay, but here I will hold it until here. So what I was talking, until I see the very clean liquidity that has made, I mean from 15-minute chart, everything I will do over here that is gambling. And maybe sometimes I'll be lucky, maybe sometimes I'll be unlucky. Okay, but I don't want you to do that. If you do that, it's up to you. But if you follow the thing, I have just explained. Trust me, brother. You will get so many chances to get the winning trade, and you can easily avoid the losing trade. That is very simple thing. If you don't follow the rules over here, I just took a entry over there without any concept, nothing. I just saw, I just I was thinking that prices will take that shallow run. I was just thinking price will take that shallow run. Okay, let me waste some more time of you. Please let me allow. Okay, to waste your time some more time. Okay, I saw that shallow run. I believe market will take that shallow run. When I don't know. When it will take that shallow run, I don't know. But I know market will take that shallow run. Okay. Now when price come here, what I have seen a fair value gap, maybe this fair value gap or this volume balance, maybe this water block, anything I have seen over here, and I took my buy over there without any consequences. I took that entry. Nothing. I have only this thing, a shallow run. Nothing. I got lost. Now when price went lower, come here, I saw it has taken the buy side liquidity. It failed to take that buy side liquidity. Then it started to consolidate. When it is consolidated, what does it mean? This is the liquidity. Look up. This is the liquidity. Okay. Now retail trader, they are selling over there. They are selling over there. it expanded lower. Where did it came? Give me market expectation over here, maybe from here, wherever you want to mark, you can mark. In the meantime, I saw this low, that low, and that low. This three low has made relatively equal lows. In the meantime, there is another low over here. This low just below those lows. This two low has taken by that low. This is the shallow run. If you go to your actually see, it has taken that sell side liquidity. See the shallow run, very little shallow run. When it has taken this liquidity, I explained this before one more time. If you remember or not, I don't know. I told you, then you have to mark the very immediate swing low, and that swing low and that low will make this liquidity more stronger. Why I'm going to mark this low? Because it has taken that lows. This is shallow run, and that shallow run are making such a liquidity with that low. Now look over here. When this is my shallow run, it has taken the buy side liquidity. Do you have a swing high over here? Now you have a swing high over here. That swing high, this swing high, and that high are not very near. But look over here. That low and that low, they are very near. See the difference. This is all from 1 minute chart. That low and that low, they are very near. But this high and that high, they are not very near. Now, if you ask me, brother, what do you mean by very near and very so far? I can't say that. I can't explain that. But that is that depends on your eyes. Okay? If you mark that high and that high, they're relatively equal high. But this high and that high, they are not relatively equal highs. Okay? That's why I am not going to mark that high and that high as my buy side liquidity. Instead of that, I would love to mark this high as my buy side liquidity instead of marking those highs. But here, I would love to mark that low and that low as my, I mean, relatively equal lows because it has taken that sell side liquidity by a shallow run. Now, when I have seen this after market structure shift to fair value gap, I didn't take my entry over there. I was waiting to see how price work over here. I saw this is fake run, okay? This is fake move because a candle closed above the constant encroachment, the very next candle closed below the constant encroachment. So this fake move will tell me that nobody closed above the constant encroachment. After that, it went lower. When it comes to this fair value gap, this order block level is very important for me. I try to take my entry to that order block level and the mean threshold. It shouldn't go above the mean threshold. I mean, what do I mean now? Not now, okay? I'm talking about here. Here, I'm just trying to see that where price would love to go. That's why I just bring it here. Over here, price can go through the mean threshold, but nobody can close above the mean threshold. If this order block is valid, nobody can close above the mean threshold. So if I see body close below the mean threshold or at the level of mean threshold, this order block is going to be very stronger. Not here, okay? Not here. I'm talking about here. Then it went through this. When it went through that low, these lows are very clean. That's why I told you I can add one more to that fair value gap, to this two line. I can add one more fair value, I mean one more contract over there, and that should be my, I mean my 265 level was just below this low, and I mean 265 loss was over there. So I didn't just actually move it, I put it over there. Otherwise, if I saw that this level is actually like here, then I would move my target profit over here until, because I have already added one more contract over there. Okay? I don't know, you guys got it or not. This is not my inversion fair value gap because this low has taken that low. When this low has taken that low, it shouldn't work as an inversion fair value gap. Let me actually remove this one. I'm talking about this fair value gap. This candle high and that candle low. This shouldn't work as an inversion fair value gap. I'm not I'm not looking at this fair value gap as an inversion fair value gap. Now, if it use this fair value gap, it is not using this fair value gap. It can be used that fair value gap. Candle low and that candle high. There is another fair value gap. So it can use that fair value gap if it would love to go higher. But this fair value gap is not my inversion fair value gap. What do I mean by that? Price should come here, then it should expand lower. Instead of that, it went through this fair value gap, come back again, and it is making that fair value gap as a inversion, I mean support. I'm not looking this fair value gap as a supportive fair value gap now. Why? Because this swing low has taken that swing low. When it has taken that swing low, this gap has no valid issue to send price lower. That is why this fair value gap is not important at all for me. It is valueless for me. I mean, this fair value gap is valueless for me. Now, if you ask me, then why, brother? Why price went higher? Okay, let's see if there is anything else. Okay, I got another fair value gap over there, but that fair value gap was more perfect. Price just came to that fair value gap, then it went higher. But here, it failed to hold the price. Instead of that, it went little bit lower of that fair value gap. But trust me, this is not a inversion fair value gap. This fair value gap is not a inversion fair value gap. Trust me, brother. Okay, brother. Hi, bro. I'm late today. Okay, Remy. I'm going to close my session for today. Okay. I have already explained the inversion fair value gap. So if you ask me again, what is inversion fair value gap? This is the third time I talked about the inversion fair value gap. How do I mark the inversion fair value gap? Okay. So I believe that will help you to understand. I think this is the fake move. I mean, it went above the mean threshold, but that is the fake move. I believe it. See, it failed. It failed to hold the price now. First time it went, I mean, it was working as inversion fair value gap. It started to go higher, then it went lower. But it failed to hold the price second time, then it went lower. Now, am I thinking it will come to this fair value gap and it will, how to say, it will use this fair value gap as a resistance? No, this fair value gap has no value for me. Nothing. This fair value gap has no value for me right now. Okay, okay, Remy, no problem, brother. Okay, I'm sorry for wasting you all of your time. And last time I'm asking, if anybody has any question, ask me now. Otherwise, that's all for today. Okay. And I mitigate my loss. Okay, don't tell me that I didn't mitigate my loss. I'm feeling happy now. I took a loss. I mitigate my loss with the rule. That was the rule-based entry, except the gambling. Okay, that was gambling. To be honest, both of them were gambling because after taking the most obvious sell side liquidity, whatever I'm doing here, this is the pure consolidation. Look at this price action. This is pure consolidation. Nothing is clear over here. So this is pure consolidation. Okay, brother, do you run this daily? Is there a specific time you go online? Rakesh, actually not daily, but if I come to live, I tweet it beforehand to my Twitter. Okay, so whenever I come to live, I tweet it my Twitter. So if you are with me, Twitter, I'm not telling you to follow me. To be honest, brother, don't think I'm telling you please follow me to my Twitter. Not like that. But whenever I come to live, I just tweet it beforehand to my Twitter. Then I come live. I just post the link as well. See, over here, coming live after 10 minutes, topics after taking, okay, whatever it is. And then I just posted the link over there. So I have no idea when I will come to live. If I see something very important to talk about, I come live because it is easier for me to explaining things throughout the live streaming instead of making a video. Okay, so if I make a video, see, I would love to show you something. Okay? I got 2,822 what to say the subscriber. Is it? So I didn't actually monetize it yet because I didn't get a pin code. I need a pin. I'm sharing this because I'm happy to share this with you guys. Okay, so don't think I'm just showing off something or something. Not like that way. So I got $87. It's huge, man. To be honest with you, it's huge for me. Okay. I follow you. Thanks, bro. No problem, Rakesh. Thank you. Thanks for following me. Okay. What are the times of the day we need to be most prepared for, as we know time and price, other than macro times that you have already said? Ravi, after 9:30 to 12, that is the place you have to wait for the setup. And from 1 to 4, I mean 1 p.m. to 4 p.m., these two time level, this is the session time, okay? This two level is the perfect time for taking the entry, okay, or doing something with the price. You will see the price action before that session. I mean, the lunch hour, you will expect it will make some kind of liquidity at the lunch hour. Before 9:30, you will expect market is actually making some kind of liquidity. Okay, this two time is making liquidity, and at the session you will go for the entry. Uh, if it is clear, uh, then it's okay. Okay, otherwise just let me know that it's not clear. I will talk about this later as well. I mean, one more time. Oh, I was over here. So I got $87 to my YouTube channel and for a few, and I got 2,823 subscriber. If you ask me, I didn't believe this. 2,823 subscriber. I didn't believe this because I never expect that subscribes. Okay, I never expect that. I was expecting like 1,000, 1,500 will be enough for me. I mean, maybe I wouldn't get that that maybe 1,000 subscriber I will get it, but I'm honored, to be honest, brother. I'm really honored to get that. This is huge for me. 2,823 people. It's huge for me, to be honest. Money doesn't matter. I mean, I'm not looking for the money, but the love I got from those people, whoever love my concept, they actually subscribe me. Okay, like the guys you are here, I believe that you love me. That's why you are wasting your time with me. Otherwise, you wouldn't be here. Okay, the love I got from here, that is huge for me. I wouldn't believe myself that people can love me. Okay, but that's great. Kasi Jeff. Oh, okay, Kasi. And thanks, brother. It doesn't matter. Slowest counts too. Yeah, obviously, obviously. I'm not hurry. I'm telling you that I'm surprised by getting this. Here, brother. Thank you, Ravi. Did you prepare anything for London session? Incentives that we spoke about in this. The thing is, brother. I mean, London session. I really don't trade that time. Okay. I mean, London session. I don't trade. That's why I don't want to talk about London session. How to explain this thing? I really don't know. Sometimes, rarely, I trade in London, but for me, New York AM session is the best time for trading, and New York PM session, FPM session, silver bullet. I mean 2 to 3. Okay, 2 p.m. to 3 p.m. It's not easy for me to trade. Okay, this is my my observation. I'm not telling it is hard, but this is for me. Okay, only for me, not for you. This is only for me. From 2 p.m. to 3 p.m. the silver bullet time, New York PM session. It is the hardest time for me to trade. I really I really get confused at that time to read the price. For me, 1 p.m. to 1:30 p.m. is very easy to trade. and the last hour, I mean 2:50 to 3:50 p.m. is much more easier for me to trade. Okay, this is for PM session, and the whole AM session, I mean from 8 a.m. in the morning to 12 or 12:10, 12:20, 20, yeah, 12:20. This time frame is very easier for me to read the price. For me, the New York AM session is the easiest time. London session, very confusing for me. It is kind of habit, okay? If you trade at London session every time, it will be easier for you. Trust me, brother, it will be much more easier for you. I don't trade, that's why it's difficult for me. Count me in, love your content. Learned a lot. Keep on going. Thank you, Lakesh. Thank you, brother. You're authentic and there is content in what you say. Thank you, Remy. I believe that, okay, Remy. I really believe that. So can we go through rules for silver bullet? Silver bullet rules, man. Everyone knows about the silver bullet rules. I mean, no, right? You don't be sorry. If you ask me the question, I really love to answer them. Okay, so don't be sorry. Okay, never ever tell me sorry if you ask me a question. If you ask me a question, I love that thing. Whoever asked me the question, I remember his name. To be honest, the thing is, silver bullet rules. Everyone knows that. Everyone knows about the silver bullet. Now, if I talk about silver bullet, I talked about this before one more time or one time, and there I got some messages from some of you. That's why I stopped talking about silver bullet. But silver bullet is not kind of very easy thing. I mean, silver bullet, silver bullet time is the heart of a session. Okay, like 10 a.m. in the morning to 11 a.m. in the morning. This is the morning silver bullet time. 3 a.m. in the morning to 4 a.m. in the morning. That is uh, the the London session silver bullet. That that time frame is the heart of a session. The session start at 8:30 and close at 12. Then it start again at 1:30 or in my opinion 1, and it close at 4. This is the session time. The London session start at 2, close at 5. This is the session time. And the silver bullet is the heart of the session. Now, if you want to play with the heart, you have to be careful because that is really so difficult. In my opinion, everyone will tell you that silver bullet is the easiest one to trade. For me, silver bullet is not easy. If you have a very, I mean, a great idea about the price, then you are allowed to take entry at the silver bullet only depending on the silver bullet rules. Okay, only depending on the silver bullet rules. If you would love to take entry, the silver bullet time. I mean, let me show it to you. That will be easier for me and for you as well. So 10 a.m. in the morning, the silver bullet start. 11 11. The silver bullet close. Let me explain. I don't know is there any setup or not. I really don't know, but I'm trying to explain the thing. So this is the silver bullet zone. Okay. Now let's check. So from 15 minutes set, this is the silver bullet started. Okay. The silver bullet has started. I have a previous fair value gap. Here is a previous fair value gap from 15 minutes set. Now I'm in 1 minute set. I saw at 10 price came to this 15-minute fair value gap. It came to this 15-minute fair value gap. After that, it gave me a market structure shift. There is a fair value gap. I'm going to take that entry. Maybe that swing low will be my target or some other level will be my target. This is the simple rules. This is the first rules of the silver bullet. You have to use a fair value gap, or if you find a fair value gap inside the silver bullet zone, like here, it has taken the sell side liquidity. It has given you market structure shift. This is your fair value gap. You are going to take your entry over there, and maybe you will target somewhere here, low hanging fruit, maybe this fair value gap or that fair value gap. You will target over there. That is your silver bullet. Now, this is the rule for the silver bullet. I really don't understand how you can take entry only by that fair value gap concept. There should be a fair value gap from before the silver bullet zone or inside the silver bullet zone. Okay, that is confusing for me. Sometimes you will see the continuation. Okay, so this run is not going to work. Instead of that, it will take the liquidity and it will expand lower. It happens. This is the first week, so we are not seeing this. But if you don't forget about the narrative, Wednesday is called the expansion day. So after taking the buy side liquidity, it has to expand lower. Thursday is also the continuation of the expansion. Whenever it will take the buy side liquidity, it will expand lower. So that type of continuation there, it is confusing for me. I really don't know why people say silver bullet is too easy. I have no idea. Okay, and I'm not telling you silver bullet is hard. It is hard for me, not for you. Maybe it is very easy for you, but it's hard for me. Okay. Everyone knows ICT, but not everyone is learning. It's the way you explain things. Perfect. Thank you, brother Ravi. Silver bullet. Okay, that's the thing. Okay, I'm not curious for new things. I know it is not the concept I was trying to talk about. I don't need it. I'm the only person I am following or I have subscription, that is ICT. ICT has started to upload a new chartered price action model. Okay, model 1, model 2, he has already uploaded. Now, I thought I will explain this. I will explain whatever is telling over there. Then I actually reject the idea. Why I have rejected that idea? The thing is, why ICT is actually uploading this thing? Why he is doing this? He is uploading this thing so that the people who are actually greedy, they are actually selling his uh, chartered member videos. People like for example, I am just telling you, brother, do you want to buy chartered mentorship from me? You have to pay me maybe $50. Then I will give you the video from ICT's chartered mentorship, okay, or chartered member mentorship, whatever. ICT doesn't like this. That's why he is actually uploading this to his YouTube channel so that people will stop to sell his mentorship videos. That is why he is actually uploading this. Now, where did I get it? I believe I got it from this video. If until I beg to yep, from that video. If you watch that video, I believe you will find this information. Whatever I just told you will get that information. That is why he is uploading these videos. Now, here, whatever he is explaining, I don't need that. I really don't need that. Whatever he is telling this is the older version, old version. You have the new version, man. You have 22 mentorship. You have 23 mentorship. Now this 24, maybe he will. I mean, very soon he is going to upload. Sorry, he's published. He's going to publish his book. So you are going to learn so many things from his book. I believe I am willing to buy his book, but whatever. I'm not telling to tell. I mean, buy his book or something to you. This is what I will do. I just told you. Okay. So I will have new information from his updated version. I don't need this. This is the older version. This is the harder. I mean this is hard. I don't need the hard information because I have the soft information or the very easiest information that I can use to this market that works most of the time. I don't need this. That's why I just reject the idea to explaining these things because that will make more complicated the price action. If you watch those videos, it will be easier for you. You will think, okay, that's actually making your price action more clear. No, brother, trust me. If you don't trust me, just watch his videos. That will make more complicated things. It will be complicated, not easier. it will be more complicated. You don't need this because you have the updated version, like the software update. Okay, I think that's all for today, and I'm extremely sorry. I thought it will be very small, but the huge live streaming, but it is what it is. Going to break this resistance level. People actually selling over here. This is very strong resistance level. They are selling over here, and it will go. I believe it will go through this, come back again to the top. They will buy over here because resistance will turn into support. Then market start to go higher a little bit. It will expand lower again, and then expand some more low, something like this. That is my belief. Okay, it will. I mean, people will think it will use as support now because resistance has broken already. What it should do should act as a support now. If anybody of you are new here, you can subscribe to my channel. Though I talk too much, yeah, I talk too much. If you love, then give me a thumbs up before leaving my session or my live streaming. Please give me a thumbs up. That's all for today. Be happy, guys. Bye bye.